Today we have with us Mr. Saurabh Gupta, a senior fund manager at Bajaj Asset Management. He currently handles over 6,500 crores across various Bajaj funds like the Flexi Cap, the Large Cap, the Large and Mid Cap Fund, the Multi-Asset Allocation Fund, and the Balance Advantage Fund. He has over 17 years experience across equity research, fund management, and asset allocation. He holds a CFA charter and is a qualified chartered accountant. We're honored to have you with us at J2Wealth, sir.
Thank you, Ashwin, and thank you, J2Wealth, for giving us this opportunity to have distribute our understanding of how we are looking at markets and our funds, how we operate. Thank you. Thank you for inviting.
Considering we just got the news that Trump has won the elections, what is your view on it and how do you think it will impact the Indian economy?
A good question, Ashwin, and the people should know that Trump has a clear policy of higher tariffs on China. So Indian companies who compete with China in certain segments like chemicals, API, pharma, all these companies will benefit because there will be higher, if there is higher tariffs on China, so there will be a clear beneficiary over there. The opposition party in US, which were the Democrats, were talking about higher tax rates on corporates there. And since they have not won, many companies, Indian companies operating in US will not have higher tax incidence, which markets were worried about. So that is also a positive. So clearly two positives coming through. If I can say that there could be some possible negative on a certain segment of the market is the green energy and the renewable. I think Trump has a very clear thought process that this whole green energy renewables is a hogwash. So there is a possibility that the benefits or incentives that US gives to green companies, companies investing in renewables might be withdrawn. And there could be some second order impact to Indian companies who supply these things. So this is the impact right now we see as per the policy statements or the vision document that the Republicans had published before elections.
Okay. Okay, moving into Indian markets. Currently, the markets have a lot of concerns like high valuations. There are also corporate earnings which are slowing down. There's also recent development with China, which is just stated. How do you think that will impact and how do you consider that when you're coming up with a new fund, the Bajaj Finserv's consumption fund?
A wonderful question again, and the people who kind of are investors through J2Wealth should know that this China pull out of money by foreign investors and moving to China has been going on for a month now. But what we believe now it is closer to an end. In fact, this has not changed anything globally. In terms of risk parameters that we track close to 200 data points. Nothing has changed. Fundamentals in terms of balance sheet strength of corporate India, banking system, or government of India policies, nothing has changed in the last 1 month. They continue to be what it used to be a month ago. In all that spectrum, if you are getting a decent correction, especially in large caps, we believe risk reward is becoming more and more favorable. So one should clearly use this opportunity. A technical correction that is happening because of some FIs, hedge funds moving out, should be a great opportunity to invest. Specifically coming to consumption, we believe post general election, the mandate of the government has now improving towards more social spending than capex driven spending what we have seen over the last 3 years. Valuation of these consumption companies, which are high quality companies, great cash flow generating companies, are throwing up great opportunity in terms of relative to their history, valuations are attractive. Relative to other parts of the market, the valuations are attractive. So it's a great time to create a very good portfolio in consumption, especially when rural economy is recovering. Government push towards consumption will increase over the next 6 months, 1 year because of some suffering in the elections that they saw. And the valuations are comforting. So this is a great time to look at this NFO, and consumption is a theme, is a long-term theme, which India will continue to see as per capita income goes up, people look for premiumization and people consume more. So when, to put the long story short, when stock markets are offering you discount, better be investors than consumers.
How are you bringing a consumption fund during this slowdown in this current market after so many Q2 results have been pretty slowed down?
Sure. Look, first of all, I think it is not an overall slowdown that we are seeing on consumption. In fact, if you see the data, rural consumption after a good lag of 3 years is improving. Every company you talk to, every result you analyze in Q2, rural growth is recovering. and that is a big sign of overall consumption recovering in India. Right now, what we are seeing is because of some misses in some companies, the market is kind of giving a correction to these kind of companies. This is an opportunity where we believe that in the next 1.5 2 years, when this whole consumption theme picks up, you will make a lot of money. One should J2 Wealth investors should understand that good news and good prices don't come together. Right now, when the news is not so good, you are getting great prices. And this is, as I told in the previous answer, it is a great concept in India. India 65-70% of GDP comes from consumption. And as the per capita income increases, people want to consume more, they want to premiumize, they want convenience, and they were looking at wellness as a concept. All these 4 megatrends within consumption will grow much faster. If you identify them right, sit tight after buying in this correction, I think there is a good amount of chances that we make decent money over a longer period of time in this big megatrend of consumption.
Taking into account a recent statement from one of the top FMCG companies stating how the middle class as a society is shrinking, and at the same time premium products are in high demand. How do you factor that when you're considering putting in a fund and picking out stocks?
Again, a good question, Ashar. Look, premiumization is a story which has played out in different countries in different point in time. This story played out between 2005 to 2015 in China, when their per capita GDP moved from $2,500 to $10,000. This has played out in developed countries. It's played out in South Korea, all other countries. So it's a life cycle of a country. $2,500 per capita is a threshold when discretionary spending starts to increase and people focus on premiumization. One thing is very clear, that everybody wants to be improving their life. Everybody is aspirational, right? Everybody wants good things in life, right? So opportunity for these products is huge. Hence, premiumization is a very important megatrend within the consumption, and our portfolio positioning will strongly adhere to companies benefiting from that premiumization trend. Companies who are positioned well to deliver those premium luxury goods is something we'll be positioning our portfolio, which will grow fast.
Nice. While numerous consumption-based funds have come out in the recent past, what is the unique feature of Bajaj Finserv's consumption fund?
Again, consumption appears to be a very generic term. Let me go back to the answer that I gave. 65-70% of India's GDP is made of consumption. India's GDP grows at 9 to 10% on nominal terms. Definitely, when you are trying to create a portfolio, you cannot rely on that kind of growth to maintain or generate enough returns, because ultimately it is the earnings growth which give you returns in equity over a period of time. So as I told you, within that consumption, we have identified these 4 mega trends. One is consume more. What are people consuming more and more? And what is the company, what kind of companies benefiting out of it? Just I'll give you an example. About 4 or 5 years ago, Ashar, how many times were you eating out and how many times are you eating right now out? Which companies benefit, right? That is one. Second, the point in the previous question on premiumization. Maybe 10 years ago, everybody was looking for 1,000 rupee shoes. Maybe people are looking for 5,000 rupee shoes. Maybe people were looking at a 40-inch TV. Now everybody is looking at an 80-inch TV. Maybe easy credit is a reason. Maybe per capita income or income levels rises is a reason. But premiumization, again, if you focus on higher growth, we will be focusing on that mega trend. Third is the wellness part, which is a very, very fast growing and evolving. Now, again, Ashar, the question comes, I'll ask to you, is that now how often do you look at the back of a processed food packet and see how much refined flour it has?
Very rarely.
But still a little more, but maybe 5 years ago, nobody knew what is refined flour and what is whole wheat flour. But now more and more people are checking contents, more and more people are moving towards organic food, more and more people are moving towards protein foods, right? This is again an area we will be focusing a lot in this portfolio. And fourth is the convenience. People are ready to pay for the convenience. People are ready to pay 20 rupees extra for a 50 rupees bread packet at 7:15 if somebody delivers to their home, right? So these are some things which you are picking, and these are the faster growing mega trends within the whole consumption theme which we'll be focusing on. And this whole mega trend thing is something which differentiates us from others. Besides our investment philosophy of InQ,
One question I have is, if you as a government, they're expecting consumption to grow, where we're expecting people to invest or spend more instead of investing. How do you think that will impact the investing habits of a person when they're supposed to be, when they end up spending more?
this is a very important question, and what we have seen is that in the last 10 years data, if you see, people have been consuming more, so consumption is growing faster than the income levels of individuals, and that is primarily being driven by credit.
Right.
So definitely not a good sign. But if you look at the data of globally big countries of reaching in terms of higher per capita income, what we have seen is that credit still is a very small portion of Indian household.
Okay.
Still, Indian household saves a lot. Net savings still hovers around 18-19%. Gross savings are close to 30%. But on a very long term, I think this is something which can worry us, but it's still 25-30 years away right now. The stage where we are in terms of credit penetration, mortgage to GDP, or personal loan to GDP, or credit card to GDP. Just to give you two data points, India's mortgage loans to GDP is 8% right now. China is at 20 and US is at 80.
Okay.
If you look at some other data points, like India has 10 crores credit cards right now in a 140 crore population. So we are not even scratching the surface right now. But longer term, yes, I think this can be a concern in individual loans and other things, which sometimes RBI highlights. But right now, we don't see this as a challenge. Thank you for inviting me, and best of luck and best wishes to all the investors of J2Wealth. And thank you, Ashar, for asking really some bright questions. This was really learning for me as well. Thank you.
Thank you. We're happy to have you here.